Sometimes I rhyme slow, sometimes I rhyme quick.
What's going on, guys? Make sure that my sound is on. Turn this music off. Turn it down. 1 minute. Maybe just turn it down a little bit. What's going on? How's everybody doing? Welcome to the stream. Get started in a second. Can you guys hear me nice and clearly? Just give me some sound feedback and then we'll get it started. What's going on, Ross? Quebec. Thanks for tuning in. Kame, Kama. Sound is good. Awesome. Good to know. Not going to mess any sound up today. Not going to make any mistakes. I'm going to try to make that promise. Mistakes by transitioning through scenes and accidentally not having the sound on. Congrats on the new house. Thank you, Michael. Thank you. Yeah, absolutely in love with it. It's new build, but there's a lot of stuff to be done. Like the backyard has to be all sodded, and had the sod guy over yesterday, and I was ripping out a bush that blocks the view of the water. There's a bush called the Rose of Sharon, I think, and spent most of the night last night ripping that out. It's got to go. So let me just transition through the scenes really quickly. Okay, the sound is on, good. This sound is on and good, right? All the mics are on. I think that's everything, right? You've been muted for like 10 minutes, bro. No, impossible. I'm looking at the mic right now. And needless to say, we haven't even been on for 10 minutes. All right, guys, what's going on? Gonna do a stream, obviously. Thank you for the compliments on the new house. Finally feeling settled in. This room is pretty echoey. I'm noticing that obviously you're gonna have to improve on that, but there's a lot of things that should come in this week that dampen the sound a little bit. For one, sound's not gonna bounce off that wall, I guess, as easily because I have that entire wall that's gonna be covered with a painting. Have a bookshelf, a new bookshelf that just arrived. Actually, it's in the other room that I'm going to be building. Hopefully that'll dampen some sound. But the room is kind of empty, so I apologize if the sound is a little bit echoey. But yeah, so finally feel like I'm getting back in the swing of things. You know, leading up to the move, like the week prior, just packing everything, not really trading as much. Stepping out of the market, losing a feel for things, losing a sense of, I guess, the pace and the tempo of the market. You know, when the internet got set up the other day, figured I could just jump right back into it. Couldn't. Horrible trading, horrible streaming. Not horrible trading, but I couldn't even get a feel for the low time frames. I had a few swings that worked out effectively, but I'm just starting to feel like I have like my cockpit back. And that's really important, obviously. You know, if you step away and you're a low time frame trader, you're like stepping away from, I use this analogy, you're stepping away from the piano, right? You constantly have to be observing the market, especially this kind of fast moving market. You know, if you're just jumping back in after spending a couple days off, you are coming in not knowing whether or not you're in sort of fast moving conditions, slow moving conditions, you know, how price is responding. So yeah, obviously right now I'm feeling a little bit better, and hopefully the stream will be better as well, because the first two streams, or the first stream I did, was horrible. I couldn't transition the scenes appropriately. I went on for like a 4-minute rant without the sound, so I think we're beyond all that. So let me just say hi to everybody. So introduce myself. Obviously, I think a lot of you have been viewing the streams now for some time. We go on and off of Twitch, but I'm Ryan, also known as Cantor and Clark on Twitter. My partner is Josh Rager. We are the co-founders of BlockRoots. What we do is try to provide on the streams a non-sensational approach to the markets as, I would say, pretty agnostic traders, directionally agnostic. It's great when the market is moving up and everyone's bullish, but I try to remain as directionally agnostic as possible. When there is a strong prevailing trend, I obviously try to tag on meaningful positions for the longer time frames, you know, from swings upward. But we try to look at the market with a fresh pair of eyes rather than just constantly rose-colored glasses, which seems to be kind of the prevailing norm in the crypto markets and crypto YouTube space. So if you could smash the like buttons, that'd be great. Just as a reminder, none of this is to be taken as financial advice. You know, this is strictly for entertainment purposes only. When I'm talking about, when I'm looking at the chart today, when I'm going over anything, it's really just how I'm looking at the market. And you know not to follow it anyway, because I am not fresh, right? I am rather fresh again after having stepped away from the screens for too much time. So you'd be stupid to follow my word. All jokes aside, also want to thank our sponsors, Phemex. So we've been sponsored and rather partnered with, we've been partners with them for 2 years now. Phemex offers spot contracts and yield generating program. So if you're parked in USDT, why not gain 7 to 10% APY? On top of that, they're the fastest cryptocurrency exchange, so still no one has superseded that. They have not put forward a matching engine that competes with theirs, and their matching engine right now is, I think, 300,000 transactions per second. So on some of the more popular exchanges, not to name any, that are phenomenal exchanges, when you click the button to market buy or market sell, there's like this weird little lag, and it's almost like that lag is just enough time for them to respond, right? Just enough time for the order book to shuffle. So on Phemex, you don't have that issue. The matching engine doesn't go down. There's no lag. There's an immediate response whenever you go to enter a trade and exit a trade. There is no wait time. You shouldn't have to wait, obviously, right? These things should work very quickly. So the links are below. Anything that I go over, platform, product, I think most of the links are below. So if you see me on a screen, I think everyone's familiar with ExoCharts by now. I think everyone's familiar with Coinalyze rather. We look at BYBT, which is, it sounds like Bybit. I'm pretty sure that's how it'd be pronounced. And TradingView. And occasionally I will experiment with different platforms. And if you ever have a question, just ask me. Just send me a Twitter DM. I have like 1 million of them right now. It's really tough to sift through what is like a question or an earnest question versus 100 people that are asking me, telling me a really sad story, asking for some kind of donation. So that's pretty much everything in the beginning, right? That out of the way, go ahead and hit the like button. If you're not already a follower, go ahead and hit the follow button. You know all that sort of bullshit that we have to go over in the beginning that we hate to say. So, sound is good. Wife is calling. Don't know why the wife is calling. No interruptions. Not on the trading stream. Okay. So we're going to go over BTC. Let's just make sure that I have this set up appropriately. Hold on 1 second. Apologies. See, I know I'm going to get a message right now. Okay. All right. So let's look at BTC. Yesterday, or rather today, this is, excuse me. Let's look at the high time frame real quick. I sometimes get lost on high time frame when I'm doing the streams because a lot of people are really only concerned with the higher time frame trade. The bigger trades, the bigger trade opportunities, the swings, and so forth. So right now, I de-risked a little bit early. I had on a spot position from the reclaim of 40K, de-risked, I believe, which was around 44. So we were upwards of 46, 45 plus. So I exited a little bit before we looks like have kind of topped out, at least in the interim, right? Sounds good still? Cool. I was gonna be worried that like I'd be 2 minutes into some kind of speech and then look over and the audio's off. So this right now is not an area, I say like a good example of something that you could do, sort of mental exercises. Imagine if like someone exited you from the position. Tom Dante went over this before. If someone exited you from the position accidentally, would you get back in? Would the risk reward be favorable? At least from the high time frame, I don't really see anything that's favorable to me. Kind of pinned between a rock and a hard place, or at least in a place that's not, contextually speaking, a good place to tag on risk. There's a difference between looking at things in a vacuum versus looking at them in context and what the current environment is dictating. So, technically speaking, if we were just looking at this, absent of any kind of context, absent of any kind of, underlying details, how strong the trend is, if we were just looking at this from a structural standpoint, this is a higher time frame support. We would expect this to act like resistance on the first test back. The next major area of higher time frame support below us now is around 40K. So reasonably, one could say, if this is where we currently are, we're closer to a position where we could define a short position, right? Define a stop above this high. Target would be back down here. From a contextual risk reward standpoint, we're closer to an area where it's better to define a position from the short side of things. But I just don't think that this is a market right now where, based on this kind of return back to this level, that I want to be shorting. This is pretty much your from the high to the low. I went over this in the last stream. This is this is kind of a 50% retracement bounce, right on the T almost. Okay, and this is what you would expect, regardless of whether this was going to continue going down or to go up. After a big sell-off, after major correction, you're really going to see that what happened at the highs is going to happen at the lows. You know, one side's going to get really caught off sides. They're going to get really overcommitted. You know, we already dropped 50%. You know, statistically speaking, it's not really favorable to tag on a short in any market at that point until there's a significant rally or throwback to a level where you could reasonably define risk. So this would have been, I think, you could have made a better case for a short if this drop happened. It happened in a very precipitous manner, but if it happened and then bounced a lot sooner. So, you know, 50% drop, and then we had a very quick move back up, you know, vertically into this level. Instead, you know, we moved sideways for over 2 months, developed a pretty significant range, multiple tests of resistance at the highs. It's mean reversion that you would expect, but I just think that there's nuance, right? So within these conditions, I don't want to, hold on one sec, guys. Let me just, I can hear like the ice cream man outside. Whoops. In these conditions, I don't think that it's a really attractive short. So this is closer to resistance, but it is, I'm saying, possible that, I guess, you know, this can stall here and then just continue upward. There's a lot of strength behind sort of the lower portion of this move versus where we are now. You know, there's a little bit cause for concern if you're still maintaining sort of a bullish stance up here. But just, you know, right now, I think that this is different than had it just come up vertically very quickly. Okay, and hopefully that makes sense. I've kind of gone over why I think about that to begin with. Wait 1 second. Yes. Okay. So 1 sec. Got my Pellegrino. So from a higher time frame point of view, this is kind of in the middle ground, right? So right now we're trading around, you know, 45. Higher time frame resistance is upwards of, you know, 47 to 50 area. You can imagine this area is probably pretty thick. And then the next major support level is down here right around 40. All right. Is right around 40. You know, we have a daily support level, right? So daily resistance likely going to maintain as support, at least initially. But I don't know if I would want to just lean on that. You know, we're not there yet. So the thing about this is you identify your levels, and, you know, we wait to see how price responds when we get there. It's not, you know, trading with horizontal support and resistance, supply demand zones is overly simplified. Usually it's like, okay, this is my resistance, I'm just going to buy it. This is my support, I'm just going to buy it. This is my support, I'm just going to buy it. It's my resistance, I'm just going to sell it. Usually you could get away with that, at least in the short term, on the first retest of that level, right? So we come back down to 40K. From this distance, it'd be the first time after coming back to higher time frame previous support acting like resistance. It would be the first retest of a major level. I would say it'd be good to buy in the low time frames for myself, but I don't know if I could really say in advance, you know, I know I can't say in advance that it is absolutely the best area to buy the dip. I like to observe price action and see a sign of strength at a level, see signs of offsides and so forth. So high time frame right now in a pretty middle, closer to resistance, but I think you get the idea, right? So for me, let's say that I'm wrong and this ends up breaking further upward. We don't get any further pullback, and I'm thinking, well, I de-risked. That sucks. You know, I'm out. Well, you know, if we're back within this range and we find support within this range, well, if we just done away with resistance and this level is not that significant, it was so significant in the past and now we're able to just blast through, I'm looking for this to act like support, and then I'm just going to be playing this range, right? So if we're all the way, you know, above, let's say we're at 52, and we start finding our footing between 48 and 50, you know, I'm not going to fade that within this range, right? If we're closer to what was at the, you know, previously support. So that's one opportunity. And then the other opportunity is, again, let's say that we break down from here. I think that 40K is a, you know, meaningful level, you know, big round number, big psychological level. But I would say I wouldn't get hung up on that, right? Like you see I have this box drawn. You know, daily levels, weekly levels, what you'll see is, a daily swing high, daily swing low, a very pivotal one that's kind of served to change the direction of the trend in a drastic manner, same on the weekly. You'll see that, you know, returns back to there again will show meaningful interaction on the low time frames, at least immediately, but then, you know, you have to see how things progress. So it's not like, all right, just 40K at the daily high. If we go on to the weekly, we'll see that I kind of drag that down to the weekly level as well. For me, what I would say is, hey, it's just a zone, right? So honestly, if we're looking at this entire range, I would say, hey, would it be bearish if price came below there? I don't necessarily know, right? I don't necessarily think that has to be the case, that if we break below 40 and we're sort of back at the midpoint, that suddenly it's, again, there's the idea of, what applies in a vacuum versus what applies in certain contexts. The market is not really responding to negative news in a negative manner, right? And the worst of it, okay? And we're seeing, again, some very different behavior across the market by larger participants. So that being said, if we re-accept, just the idea of if we re-accept back within this range, within 40, within 39, I'm not going to say, okay, that means you short from the high to the low, okay, because we're accepted back within a range, yada, yada, yada. I would say, hey, maybe there is a short, but, from, I guess, a probabilistic standpoint, if you're being Bayesian, after this kind of move, after this long period, and we do accept above, and there's no major rejection, right? It's not like we've had any kind of, catastrophic move to the downside, major offside positioning. Funding right now it's neutral and still going negative. So it's not like longs are just getting really, aggressive. And it's almost like there's still more people on the sidelines that are, tentative at this point. I would say, all right, so if we re-accept above 40, below 40, 39, all right, so maybe support is actually going to form around 37, right? Maybe we're going to take out these lows. My point is, I don't want to just say, okay, we're below 40, I'm going to short to the midpoint of this range. If anything, I still kind of want to prioritize longs because of the amount of time that we developed this range and because of the kind of response that we're having across the market to negative news and in positioning. So that's, I think, very important, right? There's obviously a lot of nuance. So those are the high time frame levels. On the low time frame, there is some cause, at least in the short term, to maybe pull off the gas pedal if you're still looking for that very aggressive long. And I think I just shaved my beard, and you guys watch enough streams to know that I have like these hairs on my mustache that go up my nose. Anyway, the profile, I'm pointing at the screen like it matters. What we're seeing in the profiles is we went from, strong trending move, sort of this double distribution structure, very balanced, almost perfect symmetry, right? Rotational factor, I think the day finished with 5, so very neutral, very balanced. Value migration though, right? The base is being built, price is trading higher, building a base below, right? And then we have another imbalance move up, trending day, double distribution type of day. The one thing that stands out is this is the first day where we really have any kind of significant value overlap, right? Meaning most of the activity, all right, in yesterday's profile was isolated towards the high. Let's just reset this because actually, one sec. Zoom out. Okay, I don't know if I was missing something. It looked like I wasn't sure if I had obsession grouped in with that one. So we have value overlap, right? So meaning today's value within yesterday's, pretty balanced between those two. All right, so pretty balanced between those two profiles, and now re-accepting and filling out this gap. So, I said before yesterday's open, thinking yesterday's open during yesterday, that one thing I would look for was value to develop. If we were looking at a rejection up here and we had a loss of what looked like aggressiveness and momentum, I would look for value to develop back within this, these two more balanced periods, right? So we're looking anywhere between, 45, I think it's 45.2 initially, just looking back within sort of this very low volume area, low activity area, because it's not necessarily, you have the profile there, the volume profile, but the TPO right there. But looking really back below, 45 down to, 40, 43, right? Where the last balance periods were, okay? Because again, it's looking like price is sort of losing that very high conviction, aggressive behavior towards the highs. If anything, yesterday's open or today's open, I'm getting confused. Today's open, let me make sure that my time is set appropriately. One sec. It is, so it's GMT off, it's UTC time, just flat. So today's open was the first time where we really saw there was absorption. So let me just zoom out. So we had an opening drive. So opening drive all the way up to, well, the slight opening drive lower, but the opening drive for the majority of the balance was from 46.9, or excuse me, 46.2 to 46.9, right? So a strong move and then a big rejection. And if you actually look at, right now, if you look at another person's calling me. It's all the Assad guys that I didn't go with that now are finally getting back to me. The guy that I used, he got back to me immediately. And they're all named the Assad father. So anyway, but the footprint, which we're looking at, I'm looking at a footprint right now that's, because the market's moving kind of slow, I'm looking at a footprint that is time-based. If the market's moving faster, I'll use some type of rotation, not time-based rotation, but some type of volatility or volume-based rotation. But the market's moving kind of slow right now. So I'm using a time-based rotation. And you can see across sort of all exchanges, this is FTX. This is, now we're looking at Bybit. It's a lot of aggressiveness, right? That was pretty much completely absorbed at the high. So you had a lot of aggressiveness, and not for nothing, for the aggressive selling that came in, you had willing bids that were willing to step in the way of that. So we're looking at, specifically from 46.6 and up, you see how there's 6.9 million contracts, there's 10 total, 13 total, fucking person keeps calling, 18 total, 21 total, and that is a lot of selling, and yet price is kind of, that activity is isolated to that pocket. So for whoever bid that point, was offside as well. So just a lot of activity for, again, price to just very quickly reject. So I think, you have value overlap. You have, let me just move this back to my other monitor. You have value overlap. You have signs of absorption at the high. Funding is still, it's I think predicted. We're starting to go negative just now, but it was positive all morning. And at this point right here, as you can see, we're starting to see that open interest is going up into this low. So I think maybe now we're approaching a point where your late buyers are getting involved. So your late dip buyers that buy on leverage. Let me just catch up to this. So if I'm looking at this on the lower time frames, it's yesterday, Monday, right? So open for the week, double distribution day. You have a big gap between there. That next daily level. So if we're looking at this higher time frame chart, this daily high right here, so from this pivot, so you can see that, for example, that level was retested. So your daily high is immediately retested. Very quick response off of there. Again, fast moving market, a lot of aggressiveness in this move. There's a lot of buying, right? I mean, as best you could put it, there's a lot of spot buying. So the opportunities are not really lasting long. As you can see, that's why we don't have a lot of significant dips. If we're going to get one, I think that daily level, right? So right around 43, coincides with yesterday's low. So we have yesterday's low. That's right around 42,750. And I just kind of highlighted the zone within this box. If we have some kind of covering of this gap, right? So we fall back within that structure, that distribution, right? That double distribution. I would honestly look for a response at yesterday's low. See if we could get some kind of swipe of yesterday's low, and maybe the low from, this is going back to, what day was this? Was this Friday or was this Saturday? I think it was Saturday's low. So we're looking at, a good amount of confluence of lows and that daily level. And that, from a falling back into balance standpoint, that's a good area too, because you're looking back at that composite, which would ultimately be, it's a little bit higher, but again, the idea of falling back within a more balanced behavior above that daily level, I think that yesterday's low is kind of a good area to focus on, in that if you lose yesterday's low and we reclaim it, it's a good trigger to act on behalf of, for myself, right? For myself. Let me see if, sorry guys, let me see if there's a voicemail. Okay, wife. This is just to give you an idea. I'm on my way home. Okay. I'm in a stream. And I'm starving. Okay. Well. So anyway, she was horseback riding. But if we are able to take this level back, right, what I would expect is kind of a playback within this gap, right? If we gap down, right, if we grind down, gap down, these highs, I don't think that this is the roll. Put it that way. I don't think that we're just going to kind of roll over from here. We're falling below, this week's VWAP, but opened yesterday. Today's VWAP lower than that. We're looking at the prior week's VWAPs right around 41.2, and you have this kind of meaty area between 42 and 40,000 anyway. So there's a whole lot of space for a larger bounce to potentially develop, right? And given the structure so far, I don't think that, I think that the market would be pretty willing to bid up this level, right, if we come back down there. On the high time frame, I went over this yesterday. If we look at the weekly, we'll stay on the daily. One sec, I have an alert still because in case, let's say we're wrong, and so this is today's rotation again, some balance between yesterday and today. Because of this range being pretty clean at the highs, I think that if we're able to gap back through this range and reclaim something like 46, we'll say, I have my alert set just in case I was not going to be around for it. If we're able to reclaim this structure as support, I'm probably going to buy that and expect extension from there. Maybe 48. A small trade opportunity, just because that's kind of been the long opportunities that have come in these conditions have been really just these micro ranges that formed, and then price has claimed them, violated them to some degree. So if we're looking at this structure and these are the highs, expecting that, hey, if we're able to find our footing up here and it's messy, it still has so far up to this point led to continuation in these lower structures. So I think that that's kind of the game plan to get behind. I mean, if we go down to the lower time frames, you'll see that in these structures that preceded where we are now, it's kind of that's the way it's been. So I mean, I would rather just play it as if it's going to continue. Let me just see. Now, high time frame, just to throw on some tools for the trend. We're above that 20 period on the weekly, which has been, again, one of the most important levels that we've talked about for years now. 20 period weekly moving average. If we're going to base out, and if we just start forming support above, let's say we come down to 44, 43.8. If we start forming support there, then maybe that's it, right? Maybe that's your retest. In a very bullish environment, retest is going to be more shallow, right? You're always going to look back on it and think, I expected it to come further down, but that's more likely to occur in ranging environments when there's less presence of a larger buyer or larger buyers as a whole. So that's one thing to consider. That 20 period right now, we're above it. You can look at a lot of things. I always say there's a bunch of good ways that you could use moving averages and Heikin-Ashi as well. And one of the things that I was talking about a long time ago was Heikin-Ashi on green on the weekly, right above the 20 period. Right above your faster moving averages, it's just a good tool to use for the trend, right? To not get sort of lost in the noise. Now, another thing also, Hull moving average. This is a great one. It's buy in Silico. Love him or hate him. Guy is very talented. But if we're looking at this is the 55, right? Actually, this is the 20. So normally we'll have it on the 55 and then be on the daily or the 4 hour. It's just a strong trend, right? I think that's one thing. It's always important to remember there are a lot of different approaches to the market. I have a very low time frame oriented approach, but I still tag on positions for the higher time frame trend, right? I still want to catch those meteor moves, and I have my accounts isolated for that reason because I don't want one to influence the other. It's difficult to practice that, but it's not impossible. So something like this, it's like you don't want to, micromanage the trade. And if you have all systems go for your swing position, don't wait for the entry that you're waiting for maybe your, lower time frame sweep of a daily level, right? It might be good to say, hey, this is a good area to, for myself, for example, start scaling in. We have green on all of these tools that we normally look at for our trending moves. If I get in at 44 versus 42, is it that big of a difference? Because this is going to be a different book, a different approach, right? A different type of stop, a different type of position size. So the trend right now, it's undoubtedly looks strong. One other thing to note, yesterday on FTX, while there was a good amount of selling during the hearing, right? During the infrastructure bill hearing. And I de-risked my dot positions and my sushi position. I de-risked it from my couch after I read a tweet about was it Bernie Sanders? I didn't follow up on it enough, okay? I saw something about him objecting. And the last where I left off, it was that if someone objected, that it was a wrap, right? That it wasn't going to be accepted at all, no amendments. Once I saw that tweet, I de-risked everything. All right, I had been in a dot position, I had been in a sushi position that I just added, and I said, all right, so I'd rather just be flat until we see how this ends, rather than try to be exposed to headline risk, right? Even though the market was kind of not as sensitive to begin with, right? So it wasn't like it was going to come out of left field. It was 50-50, right? You could have said that maybe it was split. But I forgot where I was going with that. Oh, so after all of that selling, after we get the bad news, market doesn't have any kind of, massive sell-off. I saw someone tweet and they said something like, I forgot what they wrote, but I was expecting to, after I read their tweet, to see that the market had sold off a couple $1,000s. But there wasn't really anything significant. And if you look on FTX, some absolute ape, let's go back to it, longed like 54 million contracts, I think. So one sec, let me see if I can find this. It was at the lows. Let me just go back to the, because I longed right after this happened. And I longed this morning I'll go over that in a sec. This was, I believe this was right. We'll just find the 55 million. FTX, I think, is becoming the exchange that, if Bybit is an exchange that you fade, meaning, I think that's the low. I'm looking at the 5-minute chart on a different screen. Yeah, so I just have it on a different aggregation, but, right? Yeah, 51 million delta and 47 million at one. Oh my God. So this was around 45,260 down to 44.9 area. So huge volume hitting the tape. If this happens on Bybit, I usually fade it. Okay. So if I see on Bybit, if I see on Bybit, like we take out a significant low and, through that low, there's like 10 million contracts sold. The moment the price shows that it's not immediately continuing, and if there's any kind of firmness in the bid, or price is even able to trade back above that level, so if that area is able to go bid again, so let's say let me see if I can pull this over. Okay, so one sec. Just gonna give you an example. We gotta wait for some volume to be transacted, but there's like no significant volume, I guess. Let's say, we're trading at 45,188 right now, and 10 million contracts just get sold into the bid, right? So bid drops a little bit. We're trading at 45,175. We're all the way down here. If we're able to go back above and bid back above that level, right? So, we're able to rebid 45,180. and we have that amount of volume that came in below us, and you can see it's fresh, right? So it's new business. We have open interest going up. If that happens, a lot of times I'm going to fade that because I'm like, all right, this guy just made a dumb decision. He's an ape. He's going to puke. And I know that that's good for like 100 basis point rotation. A lot of times, like you're looking at least 100 basis point rotation, so just 1%. So on FTX, if I see you have to develop what are essentially your signal norms, right? So Bybit, for example, this contrarian signal that I might reflexively oppose back at lower prices was like around 5-6 million. Now it has to be like upwards of 10 million, right? There's higher prices, greater contract size being traded, and so forth, right? So I think you guys understand that. Like 1 million contracts being traded back at 5,000 BTC is different now that it's at like 45,000. Like a lot more people are swinging around more size to begin with. So, and just percentage wise, right? But on FTX, it's different, right? So on FTX, one, there's a lot more size being thrown around there. So a 50 million print is not something on FTX where I go, oh, that guy got long at the lows. I'm going to fade him. He's going to puke. No, I think that it's actually a leading indicator. And that is, maybe it's a self-fulfilling thing, right? Maybe that 50 million print comes in, that FTX whale knows that we see the 50 million print, we're all smaller fish, we're going to get long too. So they know, like, they kind of give the signal, we provide the win for their sales. So who cares, right? The thing that matters is not why it happens, right? It's cool to have, to break it down, maybe this is why it happened, It doesn't matter, it's just that it happens, okay? If you can statistically verify that, every time that happens, there's like a 75% chance of continuation of X amount in the short term, well, who cares, right? I don't care if it was like Kim Jong who decides to long that amount. It doesn't matter, right? So that came in at the lows, and I think this is something worth paying attention to because FTX, I think, is something that is not worth fading, whereas Bybit, if you saw Bybit, 15 million contracts into the low long, you'd think, what a dummy, he's buying it on leverage. So, that is obviously something you have to back with some type of larger sample size other than just two anecdotal examples. But yeah, so let's just go through the chat real quick because I know that you guys are probably just talking too much. But I have my signal still in case, I'm in front of the computer now. Let's see where we're at. So before I went to the gym, I ended up longing this. So I longed this right here. Just the idea being that it was kind of the first retest of this level. So it was the first retest of this low, yesterday's swing low. Nothing really significant, approaching kind of an area where it was more or less a gap, but just expecting some kind of meter version out of that low. I actually placed take profits higher, so I actually had to mark it out of this when I was at the gym because we only hit up to 45.4. And it's funny because I had my highest take profit for this move up at like 45.6, and I moved that down to 45. I think I moved it down to 45.5, so that was my last TP. And I ended up closing out the remainder of that size. It didn't close like $100 over my entry, which is frustrating. But, just a reminder, if you have an obvious level, right? So if we're looking at some kind of mean reversion play, so for example, price nukes through that low back here, or rather into it, and there's a good amount of selling, which in this case was on Bybit. It's kind of the example that I was giving. It was like 11 million contracts sold into that pocket. And as soon as we started trading back above that, it was kind of obvious. So I tried to get bid as passively as possible, but I tagged on a position at market too. But looking at this as kind of an immediate area to take profit, I should know that obviously there's a lot of people that are going to be thinking like that too. So as price approaches, if it's starting to stall, you're just going to get people that are going to mark it out. It's going to make it very difficult for you to get filled, especially if you have a significant amount of size on, and that is being displayed in the book, and it's not a market order trigger, it's an actual limit. So I actually staggered these in the book, and unfortunately had to. It was a great long, but just a quick scalp, but that I stepped away from, oddly enough. but I didn't get the optimal, like sort of perfect exit. Let's just go through. So big hack today, right? Dear hacker, we are the Poly Network team. Thank you for taking $600 million from us. Big hack. Interesting things taking place afterwards. Someone gave him a tip, like don't use USDT, they're freezing it, and he gave $42,000 to them. So then after that, everybody started sending tips to the ETH network, like writing him messages in transactions. So pretty funny. Wouldn't want to be connected to him by doing that in the case that they start freezing your assets, because USDT is centralized. Remember that. But another thing that's interesting, an interesting observation, is you rarely see a hack that is one and done in like 10, 15 minutes. Like the hack occurs, holy shit, by the time we realize it and try to reconcile it, it's already disappeared, right? The money's already gone. The trail is, we've lost the trail, so to speak, lost the smell. That has never really, I don't know if that happened, like a good hack. What's funny is these things, obviously they're great at getting it, but it becomes a public display that their frantic behavior post-hack becomes a public display, right? So we're all like watching where they're sending capital, what pool they're going to, how they're sort of obfuscating their trail. And I think what happens, and this is just to get into like the behavioral aspect, $600 million in your hands after stealing it probably gives you a fucking adrenaline rush. So what you're seeing is a case study or a stress test. How do you respond when suddenly, it's like that military exercise. You're put in a room, they put a blindfold on you, you're surrounded by attackers, and then they take the blindfold off and you have to respond. Like that's what happens. They get the money in their hands and immediately their decision-making process just melts. So interesting to observe. Don't think they're going to get away with it. I think they actually accidentally sent some of it to an exchange that they were KYC'd on, which is just poetic, right? Let's go through the chat. Yeah, I am using Quant Tower. Yep. No, I could hear the ice cream man. So right now the house is kind of empty, right? So what we did was my sister moved, all right? So my sister moved at the same time that we did. We gave her a lot of our stuff because we're getting our entire house redone by one of my wife's friends who's a decorator. So we kept obviously we kept the major stuff like couches, beds, all that stuff, but we want to have the house brand new, all right? So we gave stuff away. And it turns out that, and it's kind of like we knew this but didn't know how long it might be. You want all custom furniture, you want anything custom, which is what it's going to be, you got to wait. So we're probably going to have a somewhat empty, we're also in a bigger space, a somewhat empty place. So the sound is just kind of bouncing off the walls. And the house is a big open floor plan, which is awesome because there's a back room we have like a living room in the back of the house and in the front of the house too. And the back it's kind of like, I want to call like the nook. We're going to call it the nook. But it looks over the water and it's awesome. But right now, since the house is an open floor plan and it doesn't have anything for all these new rooms, the house, this sound just bounces off the walls. So the ice cream man I don't know how long the ice cream man was going to stop. So you're saying you're not Trader SE? I don't know what you mean. Yeah, this kind of price behavior, the problem with like trading the low time frames is, I know, like if I'm looking at this chart right here, the mistake is, looking at the 1 minute chart is great, right? You learn a lot by looking at the 1 minute chart, but the mistake is attributing too much meaning to everything that's going on. If I'm looking at the 1 minute chart, I have certain areas that I'm looking at for sweeps. But let's say, for example, we're like, okay, I'm looking here and I'm looking here. I'm trading the 1 minute chart on behalf of this. Maybe we'll look back at the VWAP. The problem is when you're looking too much at everything that's taking place in between. Market makers essentially just widening spreads or just bot behavior, algo behavior, market makers alone, right? Not like that this is any kind of meaningful price action by buyers and sellers. It is, but I think you get the idea. 90% of price action on the low time frames is just noise. So, yeah, I think that there is bullish price action when you add it up. And that, yes, they are, taking liquidity. I don't want to say that after a bullish move, though, and inspire the thought that it's just going to keep going up from here, because one, I don't know, and two, this is expected. So I said this, last two streams, we finally came back to the place where you would expect price to come back to. So we'll see how, we're developing from here. But it's expected that you're after going to have a 50% crash, you're going to retrace at least half of that. Even if price was going to go back down, it's expected that if after we range, that you should have a throwback, right? Again, this came back differently, right? It took time before coming back versus the immediate bounce from traders just selling the lows and then getting squeezed out almost immediately. Neutral funding, yeah, absolutely. So positioning is everything, I think. So I haven't actually looked at options positioning. I want to look at that. Gorilla locked on, yeah. Yeah, so there, CVD is extended, but it's also very supportive of the trend. It's not like it's gotten crazy overextended where, for example, you've had a very clear range high that's painted yet and the CVD is just kind of coasting through the highs. It's not enough of that yet. Price is kind of just very much grinding upward, and CVD is more or less following it. Upward slope, no real major divergence yet, and nothing that's shared across exchanges. No, I'm not trading gold. Bybit fade is 100% real. Yeah. Yeah. So yeah, hopefully I went over that on the exchange front. I think that Bybit is where a lot of dumb traders are. I think BitMEX, so is a philosophy that I've had for a while now, and I hear that other people are picking up on it as well. My theory has always been that, and it's not like I say it's my theory and that other people are like stealing it. I think people just come to the same conclusions, right? You're not different than any other person. If you're doing the same thing and you're a smart person, and you have another smart person, you're probably going to come to relatively similar conclusions. And I say that because a lot of people in CT are very protective of their intellectual territory. I don't know. I taught you this. I was the first one who did this. I think everyone's coming to the conclusion because there's a lot of smart people. I think BitMEX is now a place where smarter traders are. The KYC forced out a lot of this shit. All right. So if you're KYC, BitMEX is, very strict. So BitMEX, I think BitMEX is clean order flow. Bybit, I think, is really dumb order flow. Toxic, dumb order flow, uninformed traders, right? So I think Bybit, you get a lot of volume coming in on Bybit. That's where your idiots buy the highs and they sell the lows, right? FTX now, I think that's weighed higher on the list in terms of prioritizing getting behind that order flow. So I think the same way that you treat order flow if you're trading traditional markets, if you see block orders coming through, if you see massive bid, aggressive buying in the S&P, don't fade that. Why would you do that? It could be a bank. It could be, it could be a fucking pension fund. Don't fade that, right? So there's a lot of nuance. No, I'm not using Sierra anymore. It just doesn't have enough exchange integrations. I love the feel of it. I've been using it forever, but yeah. No, I'm not going to trade level to level because price. People have different philosophies, right? But there is also an underlying energy to trends, right? So I can't look at a trend and say it's that textbook, or that it exists in a vacuum where there is no nuance or context to take into consideration. Because then at that point, you would say that once you violate a previous trend high, that you have to sell back down to the last point the trend started, and then it just would mean that there's no underlying energy behind a trend, bigger flow. And a lot of the times what you'll see is moves have to end in a very specific way. Momentum traders are usually the last traders to take part in a trend, and they're usually the ones who cause a blow off top or a capitulatory bottom. So we don't have any of that yet. The trend looks healthy. So being that we haven't had any kind of major blow off, the trend looks supported still. I can't say, all right, we're back below like I can't say 39 is so important that if we're 38.5, it's like bearish now. I think that I could probably be in a position where I am suddenly 2 weeks from now saying like, wow, we had a really significant response at 36. I didn't think it was coming back to 36, but it did. I saw the response I wanted at 36 that I would have looked at 39, but fuck, who cares? I don't make the decisions. The market goes where it wants. Now I'm buying 36, bullish at 36, whereas I might have said a couple months back, if we're back below 36, I probably should sell 36, stop at 37, target 30. So it doesn't just exist. Obviously, there's a lot of nuance. Like it doesn't just exist in the sense that it's we're trading these boxes, and if you fall back within one, you're absolutely going to go to the bottom of the other. I try to, in range-bound environments, yeah, but it looks like we have the underlying energy of a trend, the beginnings of one. So you try to prioritize, right? And if you're wrong, you're wrong. It doesn't matter. Like people are really still clout farming off of being bullish the entire way down to 29. And I get shit for buying 32 suddenly because I was flat. But you're just capturing these windows of opportunity. Like no one gives a fuck about the person who bought 15K in 2017 and sold at 20. That was a $5,000 move, but no one cares about that, right? So you want to just capture these windows where you could define them in a very I guess, optimal way, right? Where you could define your risk in a way that is how do I put this? Where you can define your risk in I think I said it already, in an optimal way. Trying to like be more verbose than necessary. You're back to standard. Yeah, so I was fucking around with standard deviation bands and also messing around with other channel tools as well. I always used VWAP, so I think standard deviation bands on the VWAP are a good tool to use when price is choppy. So I think when price is crabby, choppy, then yeah, I like to use standard deviation bands. If we see that market makers are kind of, it looks like one person is trading only, then yeah, I think that these standard deviation bands are useful because I don't think you see price get too far outside of the channel. So the footprint template, the color template, it's just, I could share it. Yeah, if you message me, I could share it. Funding is still, let's just look at the options real quick. Let's look at skew. Wow. So from looking at skew, obviously a very optimistic market right now. So we're looking at all expirations pretty much that are available, and we're looking at the difference between the 20 and 30 delta calls and puts. So just seeing which one is trading more expensively. Right now in the short term, you're looking at one that really shows obviously much of the favoritism was to the upside, right? A lot of call buying. Calls are a great form of leverage. There is no path dependence, right? Time is of the essence, but path dependence not necessary, right? You don't have to worry about getting liquidated. Across all expirations, though, it's supportive. So not for nothing, this is showing that maybe we are approaching some type of. This isn't, it's not showing it. It's showing that the market is optimistic, which you can't just look at that and say like, oh, that's something you fade. But it is like one of those things that you pay attention to, right? Okay, so now if we see this and then maybe we see the funding is starting to tick more positive and yeah, we're starting to lose levels versus hold them, then okay, you have like this basket of evidence that maybe points to this being a better sell or a better place to de-risk. Just you're looking at, the best way I could put it is you're kind of taking the temperature of the market. Is it overheated? Well, you could look at an RSI, you could look at a momentum indicator, but I think the best things to do are to look at positioning tools, right? Because if everybody's long, if everyone is expectation is positioned for higher prices and prices kind of just moving sideways at that point, then, longs are future sellers, right? So they're future sellers. Any kind of call buyer implies that they bought a call from somebody, right? So there's an options writer, someone selling options. If they're hedging that position properly, they're buying spot. The closer we are to that strike, right? The closer we are to that price, the more likely it is that they're going to be aggressive about hedging. So if that expires out of the money and they're left with that inventory, Like let's say the options writer bought 42 or bought 40, where we are 44, 45. If price is not doing anything after and they expire out of the money, like maybe they're going to be getting rid of that inventory, right? So that's kind of sell pressure in the market. The RSI, when it's like starting to trend towards the overbought period, a lot of the times, 80% of the time, there's probably a good reason to get behind that trend. That's not something to necessarily fade. It's when it's really blown out that it's better to be a contrarian in both directions, obviously. Let's see, just go back to the chat. But yeah, I mean, there's a lot of attractive alts. So, you guys know that I love the weekly and the 20 period for alts. And if we look at them right now, we look at DOT. I shouldn't have flattened that, and I shouldn't have flattened sushi because hell, we're back around we're slightly higher than my entry. But if we look at DOT, for example, DOT cleanly accepted now above not local because it's going all the way back to April to May, but market structure now showing recovery. All right. So if we could hold, this weekly level. So that's, for example, $17.8, $18. That it's kind of back, like we're back within a previous range, right? And again, things being bullish. Anything that's doing this right now might be giving a good buy the dip opportunity, right? For at least a return back to 28 for this or the highs of the previous range. I mean, if we look at sushi, similar situation. Sushi, you have this sort of W bottom. And it's loose, but it's doing what you would want it to do. Like a lot of times people look at a support and resistance flip and they think, all right, I wanted to see it sold, retested, and then let's just move on from here. A lot of times it's messy, right? So you might have like another week of like choppy behavior where you're just getting uncertain and maybe you get out of position. I got out of position yesterday going into the hearing, but I arguably should just get back into position now. But move sideways, right? And these look like they're honestly, sushi looks attractive from a long standpoint. A lot of alts, honestly, they look good. Luna now, this area that should have acted as resistance, it's support, right? And I mean, not for nothing, do we think that Luna is going to just treat this as support and then just trade this range and that's it? And we're going to trade the range and then fall back and then come back down? I mean, if everything is showing underlying strength, you obviously have to expect that one side or the other has a higher probability of occurring, continuation or continuation to the upside or breakdown. I think that you would expect continuation. So Luna, just everything is looking like it's retaking levels and you have W bottoms. Right. My point is, don't get too lost. Advice to myself, right? Don't get too lost expecting a certain type of retest. They all look different. It's like a snowflake, right? But the benefit of the retest is now you have an area where you could say my position is defined based on, us maintaining 26. Maybe it's loose, maybe it chops around, but as long as it's above, nothing changed, right? If these were volatility-based candles that were increments of 5, well, we just have one bar until it broke either to the upside or to the downside. So, and I think if we're going to resume upward, that your 29 entry versus 26 entry is a rounding error, right? It's not a huge difference if we're going to 100. So, I'm still treating this like it's, I'm still being conservative though, in that I think there's better areas to buy. Even though I'm leaning more bullish now. Like I said, we're getting to the point of, we're in August right now. So we're at the point where I said that it was time to start looking, the market would start really improving. So, end of Q3. So yeah, not, end of Q3, Q4. Where's the chat? Positioning tools you look at beyond options. I think basis is important to look at. The futures curve is important. So if we're in a steep contango and futures contracts are trading at a really high premium, that's a good indication, right, of maybe froth. Funding is obviously, it's always been very important. So that, funding and open interest, market cap to open interest ratio. Fading. No, fading means taking the other side of the move. Like fading means if the market is moving up, if I was going to fade it, it means I'm taking a position that's counter trend. So I'm selling. So meaning I don't think that price is going to continue up. I'm fading the move, taking a counter trend move. Wait one sec. Yeah, exactly, Hannibal. Oops. So yeah, I mean, open interest is starting to somewhat trend up for movement that has been kind of sideways. And during this sideways movement, we've seen a little bit more of a spot premium. Not a spot premium, a futures premium. So we've had, funding is ticking slightly negative now, but it's been more neutral to positive. It's neutral. I mean, it's hard to, you see, if it's not standing out, it's not something that you really want to put too much thought into. If it's not extreme. But if we're back above 46.2, again, I'm just looking at a long above. You could think of, for example, above yesterday's high is a good example too. But I think I'm going to cut it, guys, because we are about an hour in. I don't want to go too long. Again, BTC is not something that I would say you want to short, but again, it's not in a good area that I think you could define a long position, because you're just buying into resistance at this point. And I think that in the long run, you're better off not buying resistance, even if a few times happens to be the resistance goes, right? You have to be able to, at some point, hopefully be able to discern what resistances are worth buying, what supports are worth selling. But hold on one sec. There's a voicemail from this person. 5 seconds long. But yeah, I think we could expect a little bit of a pullback. We'll see though. If we're above 49, back within the structure, then I wouldn't bet on it. Okay. Small altcoins, there's a sort of a trickle down effect, obviously, to the smaller stuff. But I don't know what, when do they start? Well, we'll see. I mean, I think first you have to wait for blue chips to really start putting in significant moves. I mean, they're like 40 to, some of them 100% off the lows, but if we're talking big extensions, like meaningful moves, we haven't really seen meaningful. I mean, it is, but nothing that shocks CT. Aggregated data for CBD is on Coinalyze, but so for example, aggregated CBD spot, CBD futures, CBD coin margin. But I think it's good to look at each exchange is a different product. So I wouldn't want my BitMEX, Bybit, and Binance CBD matched together, honestly. That's just me personally, but so if you want to look at Coinalyze, aggregated CBD, there you go. All right, guys, but that does it. Thanks for tuning in. On behalf of myself, my partner Josh Rager, and our partners at Phemex, thanks for stopping in, guys. And yeah, we'll be able to do more of these streams, obviously, now that we're all settled in. I have to build a bookcase. So that's that. Everyone have a fantastic evening. Take care.